Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonia. Before we get chatting about the markets, there is an important event taking place, the global, the GFF, and Christopher Waller, who is the member of the Federal Reserve, is currently speaking. So let's listen in to his remarks.
Federal Reserve System, Mr. Christopher Waller. Governor Waller has been very gracious in accepting our invite and to be part of this. He is having multiple responsibilities on the board of the Fed Reserve System. He is the economist there. In addition to that, he also is in charge of the oversight function for the payments, clearing, and then the financial market infrastructures. It's a great honor, Governor Waller, to have you here. And we will have a couple of questions after the governor gives his address. So what I will do is, in the interest of time, I will request governor to come and give his opening address and remarks, and thereafter we'll have a few questions to discuss. If that's fine, kindly come over to the podium, Governor. A big round of applause, please.
Well, good morning. That's what I like to hear, an interactive audience. So I want to thank the conference organizers for the opportunity to speak this year at the Global FinTech Fest, a place where there is so much payments innovation. The technology-driven payments revolution in India has been enabled by a public-private partnership to build the technology stack of digital platforms that has broadened financial inclusion and done so at low cost. Building on the foundation established by the public sector, innovators in the private sector seize the opportunity to enhance payments through the introduction of new capabilities that alleviate frictions while remaining within regulatory guardrails. In today's remarks, I'm going to touch on how the interplay between public and the private sector may be the key to advancing cross-border payments. Now that fast payment systems have been established around much of the globe in over 70 countries and counting, attention is turning to how these newer systems could potentially enhance global payments as opposed to just local. Specifically, interlinking fast payment systems has been identified as a possible means to deliver enhanced cross-border payments for consumers and businesses. Interlinking arrangements would allow banks in different countries who are users of domestic fast payment systems to send payments to each other through technical connections through their respective domestic payment systems. As you all know, interlinking is one of the areas outlined in the G20 roadmap for further exploration as part of a holistic effort to enhance cross-border payments. The overarching G20 goal is to mitigate challenges with cross-border payments in a coordinated way at a global level with input from key stakeholders, including the private sector. The G20 roadmap addresses a new topic that payments industry stakeholders have been circling around for years: more cost-effective and timely cross-border payments for consumers and businesses. This policy goal has been advanced by the Federal Reserve over time in various payment system improvement initiatives dating back to the late 1990s, when the Federal Reserve began adapting an automated clearinghouse, or ACH, service to support international payments. And more recently, in 2015,
Well, that's the prepared remark by Fed Governor Christopher Waller. But I think everyone's going to watch, Sonia, on what he has to say about the U.S. Fed rate cut, right? I think September is a given. But there are still so many questions on, are we going, maybe is there a hope of a 50 basis points? What about rate cuts thereafter? So I think when, the question and answer session begins with Christopher Waller and the questions begin on the state of the US economy and the future rate cut trajectory, we'll cut back to that.
Absolutely. I think for the moment, our markets are absolutely quiet. Not too much is happening. But there are so many stocks which are hitting fresh 52-week highs. So I think we should, continue to look at those. So if you look at it today, there's Sun Pharma, there's Bajaj Auto, there's Trent, there's Interglobe Aviation. So despite the market being very quiet, there's no dearth of stocks hitting fresh 52-week highs. Cipla, Shriram Finance, Torrent Pharma. In fact, a lot of pharmaceutical stocks are hitting fresh highs right now. Manish Jain from Centrum joins us now to discuss the market fundamentals, his top sectoral picks. Manish, the sector that I wanted to start with is the auto space, because one of the stocks, Bajaj Auto, has hit a fresh record high today. And the management in their conversation with us yesterday was telling us how they plan to go big into the electric vehicle or clean energy vehicle space, right? Their market share also has been gaining quite a bit. I mean, they used to be at about 5% market share a year ago, now sitting at almost 18% market share in this space. But my question to you is, this EV theme, is it something that you would continue to bet on?
Yes and no both. But I think given the way the markets are shaping up now, there are enough and more avenues to play the EV themes. If you look at the markets today, a number of companies, especially in the renewable space, for example, the EV batteries or maybe the solar module makers, the panel makers, are all going to be, they're all sitting on the sidelines looking to hit the IPO space in the next 1 year or so. I'd much rather wait out and play them for the EV and the renewable story rather than look to play through the auto route. Because the fact of the matter is, even in a best case scenario, 5 years out, EV is still going to be a very small and a negligible portion of the entire auto basket in India, unless and until we really see some path-breaking, investment which is going to happen as far as the infrastructure is concerned, especially the highway charging infrastructure is concerned. I'm not going to be very, very overtly optimistic on the EV story. It's good to play it for the sentiment of it, but I'd much rather play it more through a pure play model rather than look at it from an auto space perspective.
So Ola Electric is a pure play model. Is that a stock that you would consider? You spoke about some others, right? Like solar modules, batteries, etc. But what about Ola Electric?
So if the shoe fits, why not? I mean, the fact of the matter is,
but does the shoe fit?
See, the point is there are a number of ideas that we are evaluating in this space. A number of companies that are already listed, a number of companies that are in the pre-IPO stages, and we are evaluating them all very closely. The fact of the matter is that Indian markets in the last 5 years have changed very dramatically, right? The whole composition of any portfolio that you look at it, whether it's defense, whether it's renewable, whether it's all these new age technology companies, some of these tech-based food delivery platforms, for example, the way people used to perceive them 5 years back versus the way they are perceived today, there's a very dramatic shift in that. So yes, why not?
What's the overall view on the markets, Manish? I recall our last conversation where you were cautious. In no uncertain words, I think you were anticipating a bit of a pullback and you were in your fund, accumulating some cash to deploy at lower levels. Well, we've had time correction, but we haven't had a pullback.
There was that one day when the market corrected 3%. I think that day we deployed about 4-5% of the funds that day. And now today, beginning of last month, we were at around 7% cash position. Today, we are sitting at around less than 2% cash position. And my view on the market is very, very simple, which is that going into the next 6 to 7 months, the market is not going to see any major correction from here onwards, but it's not going to see a very massive, exciting sort of a rally either. I think we are looking at close to 26,000 levels for the markets, which is roughly out another 3 to 5% sort of a rally from here onwards. But it's going to be intermittent corrections, and every time the market sees a marginal pullback, I would be deploying the money, because from a 2-3 year perspective, the story is still very, very interesting. India can still be a 15% compounding sort of a market from equities perspective.
Okay, India can be a 15% compounding market. Got that. Today is a day when a lot of pharmaceutical stocks are hitting fresh highs, right? Whether it's Cipla, Torrent Pharma, Sun Pharma, even some of these broader market pharmaceutical names like a Piramal Health, etc. But your thoughts on this entire space? If someone has missed out on the rally, is there more to go?
Yeah, I mean, we've missed out on it. We don't have a massive position in pharma in our fund, and that is kind of a shame. But pharma is a sector that is coming out of a very long lull, almost like a 7-year kind of a lull. And it's now starting to come on its own. And a number of concerns that people had, whether it's the pricing or the ANDAs or, the US regulations, all of that, I think they are now starting to go away. And I do think that it's going to be a slightly longish sort of a run, especially given the pullback that we've seen in the banks this year, and especially the kind of rally that we are witnessing to see some of these alternate sectors which has not participated yet so far. For example, IT, for example, FMCG. I think pharma, again, fits the bill perfectly. So yes, pharma does have a little more room to go as far as the rally is concerned.
Okay. You said you've deployed cash, right? As the month has progressed, from 7% cash holding, you're down to 2%. Where all have you invested?
So we've picked up a number of sectors. There are a few sectors where we've kind of incrementally further booked profits. For example, some of these retail names, we've had like a 20 bagger over there over the course of last 4 or 5 years. So we've kind of booked a little bit of a profit over there. Real estate is something that we had a massively overweight position on. So we've kind of booked a little bit of profit over there. But otherwise, what we have done is we've picked up ideas. We've picked up ideas in the affordable housing space. We've kind of picked up ideas in the NBFC space. Hospitals is again another area where we've kind of deployed a little bit of a money. And it's been our debut month as far as metals and short cycles are concerned. So we've kind of picked up one idea over there as well.
Okay, so you're saying real estate, you booked a bit of profits there. So are you planning to churn out completely in real estate? Because there were some reports indicating that now there's a bit of saturation, a bit of a slowdown as far as, property registrations are concerned, especially in some of the top metro cities like Mumbai. How do you read into that, and what does this mean for some of the listed players?
So the fact of the matter is, the reason why we look to book profit in real estate is because we have done fantastically well, right? I mean, this is a position that we had built up about 18, 19 months back. And 3 ideas that we picked up, 2 out of them have been multi-baggers for us, about 3 to 4x returns. So it was very prudent on our part then to kind of get out of those names. But I do think that real estate as a sector still has a little bit more time to go. We are still in the mid-cycle. We are still not at the peak of the cycle. The fact of the matter is urban consumption has seen affluence, discretionary consumption has seen affluence. A large part of the real estate cycle that you've seen in the last 18 odd months has not been from an investment perspective, but it has been more from a consumption perspective. Inventories are still at about 12 to 14 months. The number of new launches that the builders are doing are they are very, very, very conscious in that space. So I think overall, and the rate cut, right? I mean, the cycle of the rate cut is still due on our head. So I think there's still some leeway to go. So we are not going to be churning out of it completely. It's more of a profit booking than anything else.
Manish, thank you very much for joining in today on Trading Hour. Look forward to our next conversation. Get into a short break on that note. We'll come back and discuss commodities with Manisha Gupta. Stay tuned.
Welcome back to Trading Hour on CNBC-TV18. It's going well for the market. It's flat for the headline indices, but there's plenty that's happening beneath the surface. Let's focus on the commodity space now. Manisha Gupta joins in, and today we are focusing on some of the softer commodities. Manisha, good morning.
Morning, and thank you for that, Sonia. Well, yes, and there are some very strong gains coming in for some of these softer commodities. I'll start with Arabica coffee, where we have seen prices gain up by almost 3% in the overnight markets, and it is up 13% now in the month of August so far. And we have seen the prices gain up by 70% in 2024 as well. Well, the reason for this is that Brazil, which produces nearly 70% of coffee, is looking at severe heat waves, and that has led to the yield going down, and coffee prices in demand have been on the stronger side, supporting prices there. The other one clearly is rubber, because here as well we've seen prices keeping support for the last few months now. It's trading at a 2-month highs right now. There have been reports of heavy rains in Thailand that has impacted production, and there has been production concerns in most of producing countries, whether it has been about Malaysia, Philippines, and many parts of India, which is in Kerala as well. So we have seen rubber prices gain up by almost 13% in this year until now. And on the meanwhile, demand has continued to pick up from Europe, US. There is some improvement in demand from China, which is supportive for rubber prices. And the third commodity on my radar is sugar, where the global markets have continued to surge, so much so that we are trading at a 6-week highs onto this one. In last 1 week, we have seen the sugar prices gain up by almost 11%. There have been reports of massive wildfires in Brazil, which has led to yield declining. And there is a concern that almost 5 million tons of cane crop perhaps has been lost to these wildfires. Another reason that you are looking at sugar prices trading quite firm in the international markets.
Manisha, everything is up. What is down?
Not much really, except the crude oil prices. But then again, crude gained 7% in 3 days. It's down 2% yesterday. So that's the only thing in the negative. But on a day-to-day basis, on a week-on-week, month-on-month basis, most of the commodity is really positive. So August clearly is going to be a bullish month.
Thank you very much for that. We will get into a break on that note. Not much happening on the equity front. We'll invite Mitesh Thakkar on the show and find out a few trading ideas. Welcome back. The day belongs to IT. So the Nifty IT index itself is up 1.5% on a day when the benchmark indices are practically unchanged and are flat. Oh, the midcap index, IT index is now up 1.9%. So it's only moving from strength to strength. One of the big movers is L&T Technology Services. Yesterday, they held their analyst day and the company has reiterated their medium-term guidance of achieving $2 billion of revenues and increasing margins to 17 to 18%. They've also called out 3 verticals: mobility, sustainability, and tech. They're going to be focusing on these 3 verticals, and their aspiration is that eventually all these 3 verticals can achieve $1 billion of revenue each, with a focus on expanding margins. So when the analysts ask them about the near term, they're saying that the conversations have improved, the pipeline has improved, but still deals are taking time to convert. Now, Motilal Oswal is bullish on L&T Technology Services, and they're saying the company's revamped go-to-market strategy. The company said that tech cycles are now becoming shorter. So the go-to-market, in order to get these large deals, win these large deals, has to change. And the go-to-market strategy opens up new avenues for growth, particularly in the automotive software development vehicle space, SDV as it's called, and that could be positive for a company like L&T Technology Services. But on the other hand, Nuvama says the risk reward is not favorable because valuations are expensive, and Nuvama has a hold rating on the stock. But the street is clearly excited about the growth prospects and the fact that the company is going to grow while expanding their margins.
Okay, well, let's get back to looking at the Nifty. Look at that. Just 9 points away from that all-time high distance to 25,079, right? I mean, we're virtually there. It's just a matter of time that we get to that level. But we are counting down to this milestone, a big one. Given the kind of hurdles that this market has had in the past many weeks and months, it has climbed every wall of worry and now almost back at that all-time high. So we'll get to that, I guess, in a day or two. It's just a matter of time. But for now, virtually at those all-time highs. But Z Entertainment and Abhi Organics are also in focus on the back of fresh brokerage notes. Sudarshan is here with the details. Sudarshan, over to you.
So first talk about AMI Organics. HDFC Securities has upgraded the stock to buy with a target of ₹1,600 per share. It has listed out few reasons for the upgrade. First is ramp up in Fermion contract. Second is expansion of specialty chemicals portfolio. Third, balance sheet turning net cash in Q1 FY25. Increase in better margin CDMO contribution and ramp up in capacity utilization of specialty chemicals plant. It expects margin to improve by more than 500 bps by FY26. And expects profit to grow at a 38% CAGR over FY24-26, led by a 29% CAGR in EBITDA. Coming to Z Entertainment, company yesterday had announced that it has settled all the disputes with Sony Entertainment regarding the transaction that they had signed a few years ago. After that, brokerages have written on the stock. Citi maintains the sell call with a target of ₹137 per share. It says all eyes will now be on business fundamentals, as settlement would help allay investor concerns around potential liabilities, and now it will monitor any material improvement if company sees with respect to ad revenue. UBS has a neutral call with a target of ₹180 per share. It says Sony settlement is seen as positive as it removes a key overhang that company has been facing for the last few years.
Thank you very much for that. Z was a big mover yesterday. Let's move on now to Zydus Life. That's gaining after the company received a final approval for a drug which is used to treat dyskinesia, patients with Parkinson's. Ekta joins in with the details. Ekta.
Thanks for that. Well, yes, Zydus is in focus because they've received final approval from the US drug regulator to market a drug which is basically used in Parkinson's when a person has involuntary movements. Now, it is final approval for the 68.5 mg drug as well as the tentative approval for the 137 mg drug. Now, the company has said that the approval makes them eligible for 180-day exclusivity under the 68.5 mg drug of amantadine extended release capsules. So that is basically the drug which is used for Parkinson's. Separately, Zydus is in focus on account of a Jefferies note where they've upgraded the stock to buy. The target price is raised to $14.50. They say that the recent stock correction presents a buying opportunity. They see at least one big launch worth $80 to $100 million every year. There's a strong pipeline in the US and improved growth prospects in India, which will aid sales and margins according to them. And a high reliance on the US markets makes it a high-risk, high-reward call.
Okay, thanks a lot for that, Ekta. Well, Mitesh Thakkar joins in now for a quick technical check of the market. Mitesh, hi, welcome to the show. We've got so many stocks that are hitting fresh highs, but I do want your, views on the pharmaceutical space, especially Sun Pharma, Cipla, Biocon, all sitting at fresh highs or rallying quite a bit. Your thoughts here, and do you see more on the charts?
I do see more on the charts, Sonia. Good afternoon. Biocon was a recommendation day before yesterday and today morning as well. I think after a good sideways action, the stock has again picked up. That apart, I think, other stocks are also doing well. Out of the pharma, I think, has hit a fresh high. Glenmark is near the fresh highs. In fact, what is breaking out today is Torrent Pharma. I think, it's just made a fresh high today and it's above the earlier highs of 3370 odd levels. So I think that could still see some momentum. I think overall the space is very good, but if I was to choose one stock, I think that would be Biocon purely because of the fact it's correcting and now it's getting into an uptrend again.
Any other stocks that you'd like to highlight?
Yeah. So I have a buy on PFC. PFC has had a good breakout yesterday. Today is quiet, but I think the trajectory is on the upside. So buy here with the stop at about 529. Look for 555 as the near-term target area. And that apart, I think, CanBank is something which is on the radar as well, where I have slightly negative view. So CanBank is a sell with a stop at about 112.5 for targets of around 105.
Thank you very much for that. By the way, Asia is largely a color of red today. Some of the markets like Hang Seng are down more than 1%. Shanghai is down about 0.5%, but the Korean market Straits Times in the red, not by a whole lot, down about 0.25%, but the color is red for Asia this morning. Get into a break. We'll put the spotlight on some other stocks that are buzzing in trade today. We'll discuss midcap IT in greater detail.
Welcome back to Trading Hour on CNBC-TV18. Well, mid-cap IT companies LTI, Mindtree and Tata Elxsi are in focus. On the back of reports from brokerage house Kotak, LTI Mindtree has been upgraded while Tata Elxsi is under pressure following Kotak's sell rating. Rima is here with the details. Rima.
So let's start with LTI Mindtree. That's the large cap with a gain of nearly about 6%. Now, Kotak has upgraded LTI Mindtree to an add from a reduced rating, and their target price stands at 6,200 rupees. The key reason is the growth rate will recover. Now, in FY24, that's last year, growth for the company was just 4.4% dollar revenue. This will pick up to 6.5% and further accelerate to 11% by FY26. Now, what will drive this pickup in growth will be an improvement in two key verticals, BFSI and high-tech, which contribute a lot to LTI Mindtree's revenues. These were the impacted verticals. It dragged growth down, but now you're already seeing signs of a recovery in BFSI, that's banking and financial services, particularly in United States. So as these two verticals recover, growth rate for the company will pick up. Secondly, the other overhang on the company were the spate of senior-level exits after the merger between LTI and Mindtree. So on that, Kotak says the leadership departures have cooled off in the last 3 to 4 months compared to the flurry of exits in March and April. That said, they do say, Kotak says that margin expansion is difficult, so don't expect that. And whatever little happens is already priced in. So they expect LTI Mindtree to be a good compounding play with strong, consistent EPS. They've raised the fair value multiple to 28 times. But on Tata Elxsi, a stock which gained, had a blockbuster last 2-day move, 26%. Kotak Institutional Equities says, well, the stock was expensive to begin with even before the rally. So they have a sell call. Their target price is 5,500 and the current market price is 8,500. So the Kotak's fair value is much, much lower than the current market price. Valuations are stretched at 61 times forward multiple. Valuations bake in a 20% revenue growth for the next 10 years. And they're saying that even as the automotive piece vertical will grow because of JLR, the spending that's taking place, the other two verticals for the company are facing some challenges, whether it's media and communication or even healthcare. So expecting a 20% kind of revenue growth for the next 10 years, which the valuations bake in, look a little unfeasible according to Kotak Institutional Equities. So very expensive and they've got a sell call.
Okay, well, moving on, MCX has been also gaining on the back of positive brokerage commentary. Vamakshi is here to tell us more. Vamakshi, over to you.
Absolutely. HDFC Institutional Equities met up with the management of the company. They've gone ahead and maintained a buy rating and in fact raised their target price on this counter from 5,000 earlier to 6,000 rupees per share. In the meeting, they say that the company has provided good strategic direction. They have an exciting product pipeline lined up. They're launching new products such as monthly series as well as index options. In fact, they are technically testing the weekly option product and that is currently under progress. They are also continuously enhancing the technology stack and are also focusing on increasing institutional participation and hedging activity on the platform. Additionally, the appointment of the new MD and CEO, Mrs. Praveena Rai, will also significantly help in boosting these strategic initiatives. In addition to that, MCX is well positioned to withstand ongoing regulatory challenges, one of them being the curb on index option volume, the other one being the reversal of interest earned on clearing funds to clearing members. The company said that they have not quantified the impact, but the impact is expected to be minimal. The third one being the true to label charges, which will discontinue the practice of levying slab-wise fee structures. And over here, they say that it is neutral for exchanges as they will likely switch to the blended fees. Overall, the brokerage believes that MCX will be able to sustain its growth in the future. New products will fill the gaps and provide additional support to the growth story. They're expecting notional and premium volume to grow at 61 and 43% CAGR respectively from FY24 to 27. They've maintained their revenue and EPS estimates, but they've gone ahead and given a higher multiple of 40 times as compared to 35 times earlier based on better revenue visibility. And given those factors, they've gone ahead and upgraded their target price on this particular counter. So given the positive commentary coming in from the management, the stock is surging in trade today.
Thank you very much for that. And by the way, the Nifty has crossed its earlier record high of 25,078 and it's not stopping there. It's picking up now and approaching 25,100. 25,090 on the Nifty. It's a 72-point up move in the face of muted global cues. So the markets have scaled all-time high levels today. The midcap index is moving in step. And the last 10 minutes, that up move that we've seen, the spike, you've got names like a Bajaj Auto with a 1.5% up move contributing on the way up. IT has been strong, and now HCL Tech too has joined the up move, again gaining 1.5% on HCL Tech. Infosys, Coal India it's now back in the green. It was in the red in the morning, but Coal India is now in the green. Tata Motors too has been a big mover. Banks is still in the red, not by a whole lot, but just down about 76 points. But let's see whether banks can change their color from red to green.
Oh, absolutely. I mean, what a phenomenal move for the market, right? Today, it's looking like it's just a 0.3% move. but just pull up the last, 6-month chart. Every bad news, global bad news, local hiccups, election, verdict, budget, anything that the market has digested, even the capital gains tax, right? Everything was digested by the market well. I think it is also the retail flows that has come into the market in a big way, especially domestic institutional investors, and the kind of money that has come in from the retail end, right? This whole equity cult has been growing by leaps and bounds. We've seen in the month of August, 10 crore, demat accounts is what we've seen overall, right? So that just goes to show that whatever is the global news, the local news is so strong and the conviction in our markets is so strong that we've been able to climb every wall of worry. Now, having said that, see, there is a correction that is expected to come. I mean, it hasn't come for 1.5 years. So I guess at some point a correction will set in. But as Nilesh Shah was also telling us yesterday, right, even when the correction sets in, it may not be as steep. It may not be a very big fall because the conviction in this market is so strong that as soon as a correction sets in, perhaps money will start flowing back in. So that's been the kind of conviction that this market has had. So phenomenal move, really. It's crossed that earlier level of 25,078, hit a new milestone, and a large chunk of it has been, we've got leadership both from banks as well as from IT. So there's been a lot of support coming in, even from some of the newer, some of the new tech companies, etc. So I think it's an across the board, it's a secular up move that we've been seeing. Gautam Shah is joining us, by the way. He's someone who has been advocating for new highs in the market for a while now. Gautam, welcome to the show. Big day for the market yet again, right? New milestones is what we've seen. Gautam, is my voice reaching you?
Yes, it is, Sonia.
Okay, great to hear you. And at a time like this, the market has hit record highs. There are still so many naysayers in this market, right, Gautam? Many people believe that there is a big correction coming, which it should at some point in time. How do you deal with that, and how do you navigate the terrain from here?
Well, Sonia, naysayers are a catalyst to any bull market. And I think over the last couple of months, we've had more concerns than talks of greed. And I think that's a great place to be in. And this market has seen an incredible climb of wall of worry because we've had so many developments globally and locally. And despite the fact that the Nifty is at 25,000, I think it's just phenomenal. I think this is going to continue. One should not time the top. No one knows where the top is. It's just that the domestic liquidity just is helping this market go up on a consistent basis. 5% correction is the new 15% because, people who look at the previous bull market and say that we haven't seen a 10-15% correction, please note for the last couple of years, we've had multiple 5% corrections, and that has really cooled off the market. So even at current levels, I don't see overbought signs. I think banks are yet to make a comeback. Newer sectors are starting to do well. Look at the comeback of IT and pharma in the recent past. Metals are likely to break out. Chemicals have started to do well. And I think some of the previous winners of the past have taken a backseat. Real estate, auto, PSU, capital goods have gone nowhere for the last 4 to 5 months. But broadly, I think the trajectory is still up. And I think the way we handled the global developments in the first half of August was quite commendable. So I think you're going to see better days. And in terms of levels, 25,500 is pretty much the next important number to work with. And I think the next big opportunity could be financial services led by NBFC.
So, Gautam, you don't see any toppish signs, any signs of frothiness at the index macro level in our market, which suggests a correction is coming?
No, I don't see that, Reema. In fact, at the starting of the month, we were a little concerned that the market was a little top-heavy on the breadth front. And then the global correction happened. Mind you, the NASDAQ index, the Dow, they all corrected 10%. The Japanese market corrected about 17%. And our market fell about 4%, 25,000 to 24,000. So with that sweet correction, the market basically digested all the negativity that was there. And it's now, healthy once again. And top quality mid-caps and small caps, look at the way the broader markets have behaved in the last few weeks. It just tells you that there is so much money on the sidelines that quality stocks are being lapped up on every correction.
Okay. You were briefly mentioning, auto stocks, right? Bajaj Auto is definitely the one in focus today, as is some of the other auto names, whether it's TVS Motor. This whole renewable energy, green energy space, electric vehicles is picking up in a big way. But on the charts, do you think there's more of an upside in some of these names?
No, I think for the time being, we've let go of auto. I think the risk reward is just not there to make serious commitments at these prices. Maybe they are at hold for an investor who's looking at things for the next 3 years. But if you're looking at an opportunity for the next 3 to 6 months, I don't think auto is an opportunity. I do believe that if the rate cut cycle were to start, which I guess the Fed has already indicated, and it will follow suit in India as well, I think financial services led by NBFCs could be big beneficiaries. So I see some amazing opportunities coming up in NBFCs led by Bajaj Finance, Bajaj Finserv. And I think metals could also do something special over the next 3 to 6 months.
Mihir Vora is also with us on the show. Mihir, thank you very much for joining us on this momentous milestone that the markets continue to hit, so many times this entire year. We left off the last conversation saying it's time to be, choosy in the markets, not cautious. How do you expect, we've literally not had a correction. You've been in the market for decades and you know that this is not sustainable. At some point, a correction does set in, but it's just not come. We've not seen one for the last maybe close to about 2 years now. So what would your advice be now to share, to retail participants?
Hi, first of all, congratulations to all of us. Nobody will look at this horse in the mouth. So I think it's a good time and a good reflection on the strength of the economy that the markets are touching new highs. But yes, as you rightly mentioned, there has been probably no sharp correction at the market level, but the markets have corrected at the sectoral level. If you notice, so you had large underperformances by the IT sector at one point in time. You had continuing large underperformance by the banking sector as we speak for almost for 1.5 years. The banking sector has underperformed, but the weight of the weight of the market has been pulled by has been lifted by the other sectors. So there has been, I would say, a healthy time correction and a price correction, sector by sector, stock by stock, and the market seems to be rewarding growth and punishing lack of growth, and I think that should continue. So it's not like every sector is in a bubble territory or every stock is expensive. There is enough scope and enough rationality in the market to pick and choose and build a portfolio.
Okay, quickly, Mihir, before we let you go, congratulations to you as well. I mean, you've been advocating for all-time highs for a while now, and you've been recommending, sectors as well. But at any point, would you start to get cautious? Would you start to raise your cash levels? Is that a good way to approach the market now?
So I would always be cautious, but more on the quality side. It's very tempting to go down the quality curve in a raging bull market, especially when the run is so broad-based in mid-cap, small caps, etc. So there is always this temptation to go down the quality curve. So that is one point that I would be cautious about. Liquidity, illiquid stocks, frothy stocks, that is one. And in general, I think there is still scope for stock picking. And cash calls is not something that we are actively looking at this point in time.
So Mihir, where do you think, which are the sectors where you think a correction might set in? Because that's been the nature of the market, as you pointed out. At the index level, we haven't seen a correction, but individual pockets of the market have gone through their own time correction, own price correction. So where do you think the next correction sectorally could come in, where things are looking still a bit overheated?
Some of the thematics that we've been quite bullish on, for example, the railway theme, the defense theme, they have already started correcting. We are seeing time correction and price correction happening because while the long-term fundamentals, nothing has changed. Absolutely robust view for the next 5 to 10 years in these segments. But markets do tend to go a little ahead of themselves, and that's what we are seeing in certain segments. So I think ultimately, if we look at the long-term growth versus valuations prospects, market is tending to overshoot and then correct, and that we have seen sector after sector. So these fancy stocks probably are already seeing some kind of time correction. In the recent past, we've seen a lot of action in the renewable space. Again, very exciting sector, very bright long-term prospects. But stocks probably are all getting a bit ahead of themselves. So I think that time and price correction will happen from time to time in these kind of pockets. The illiquid and the most frequent counters are really the ones to be, to be wary about.
Hey, Mihi, thanks a lot for joining in. Appreciate your time here. Gautam, thanks to you as well. Big day for the market. The Nifty has hit a fresh record high. Of course, it's up, I think, 80 points right now, the last time I checked. So not just hitting a record high, but building on to its gains. Look at that, almost 90 points higher now, moving to the highest point of trade. This is the first time ever the Nifty has hit 25,100 on an intraday basis. Let's see if it holds on to these gains. Remember, it is a matter of time before which some sort of a correction or pullback sets in. But for now, the market is just enjoying this momentum-driven rally. Let's step into a short break. On the other side, we put focus on the boardroom battle underway at Godfrey Phillips. Stay tuned.
Welcome back. A big boardroom battle is underway at Godfrey Phillips with a dispute between Beena Modi and her son, Sameer Modi. Now, there have been lots of twists and turns in this. The company's Nomination and Remuneration Committee, NRC, had recommended against Sameer Modi's reappointment to the board. Now, the latest is that the AGM is all set to be held on the 6th of September, where Beena Modi's appointment to the board is awaiting a shareholder nod. Not just that, there was a tweet by Lalit Kumar Modi regarding the upcoming AGM where he's calling individual shareholders to vote. And, there have been certain promises about a dividend payout if Beena Modi is voted out, if she is voted in. So there have been lots of twists and turns in this particular, battle, this feud which is taking place within the Modi family. To talk more about it and what should we expect at the AGM, what should retail shareholders do, Hetal Dalal of Institutional Advisory Services joining in, and GN Gupta of Stakeholders Empowerment Services, SES. Thank you, for joining in. Mr. Gupta, if I may start with you, if you could tell us on 6th of September, which is the AGM, what is under consideration and what is the advice that you are giving shareholders?
Under consideration on 6th of September are a couple of resolutions. Leave aside all the resolutions regarding the accounts, auditor, etc. The 3 resolutions are for 3 individuals, Beena Modi, her daughter, and Sameer Modi. There are 2 resolutions related to her daughter, relating to remuneration and appointment as a full-time director. And regarding Sameer Modi, since he is coming for retirement by rotation, so the NRC has recommended that don't appoint him. We don't recommend his appointment, although he is offering for appointments, which we find is a rare occasion where somebody is wanting to be appointed and NRC is refusing. And NRC also says that not to fill the vacancy of this. Now, what is going to happen, we do not know. But we have opposed all 3 resolutions. Rather, we have said all 3 family members should be ousted from the board for the simple reason that in boardroom, if you have a divided house, the company will suffer and shareholders will suffer. So I am asking basic question to them, or rather to independent directors, that what for shareholders have put them on the board? Obviously, to ensure that the company is run in fair manner. Are they competent to adjudicate between Lalit Modi, Sameer Modi, and Beena Modi and her daughter? Obvious answer is not. Neither it is their role nor they are competent. Having said that, can they take sides? If they are not competent to adjudicate, they cannot take sides. So if they are saying that don't appoint Sameer Modi, then they should obviously also say that Beena Modi and her daughter should also not be appointed, because board route should be clean of all individual things. And the most important thing which we noticed is that NRC has written a lot about Sameer Modi's conduct, his abusive behavior for harming the company, all that he has written. But at the end, they have paid 40 crore rupees bonus to him. So I can't understand that on one hand, you are saying the person is causing harm to the company, and on the other, you are paying 40 crore bonus. So these are the things which do not reconcile. So we have said, remove Beena Modi, Sameer Modi, her daughter, and everybody of the family. Let them settle. And it will have 2 positive things. One, the board rule will be unified without any squabbles between the 2 or 3 directors. Secondly, it will put pressure point on them to settle their dispute. If they are out of the company, they will settle their dispute faster. As long as somebody is in the company, dispute will not be settled.
Fair point. Hetal, morning. Thank you for joining in. Comment on this particular point. And there is also the issue which will be raised in the AGM about Ms. Beena Modi's remuneration. So comment on that. And what is it that shareholders should know about it?
So thank you for inviting me. Quick disclosures, I don't own any shares in Godfrey Phillips. I own one share in Godfrey Phillips. Look, our view is that family matters should be separated from the company. They need to be sorted at the dinner table, not at the board table. And therefore, our recommendation equally is to remove all family members from the board. We understand there is a CEO, Sharad Agarwal, who's competent to run the business. So in the interim, there is professional management which should actually be brought in. And independent directors should actually protect the company from the family dispute rather than taking sides. On the compensation levels, Beena Modi's compensation in FY24 was significantly higher than that of Sanjeev Puri's at ITC. So she was paid about 34-35 crores. Expected compensation is significantly higher. And she's also the chairperson and managing director at Indofil. So she's now got 2 executive roles. Indofil is a reasonably sized company. So she's now got, she has 2 executive roles. She's going to draw remuneration from both. And for listed company, our view, of course, is that you need to have more focused leadership rather than a distracted one. The other compensation resolution which is coming up is also for Charu Modi, because not only is she joining the board, she's going to hold an executive capacity. And there is no clarity on her role when she becomes an executive director. Compensation levels are significantly high. They're just open-ended. It's basically up to 5% of profits. For Beena Modi, also compensation is up to 5% of profits. And aggregate executive compensation can go all the way up to 14% of profits. So essentially, for Charu Modi, we estimate a compensation to be anywhere between 50 to 60 crores, which is not only high for the size of business, it compares to some of the Sensex company CEOs. So I think the NRC to that extent has failed to benchmark compensation. And ideally, we should also have a cap on the absolute level of compensation rather than leaving it open-ended to say 5% of profits. Look, the performance is good. As the performance increases, that number is just going to go up. And 50 to 60 crores for both Beena Modi and Charu Modi together, I think, individually, is a significantly large number for the size of the company.
Out of time, but your points are well noted. Thank you very much for joining in. Once again, the tweet by Lalit Modi will also come out, where he posted on Twitter saying the current management is calling individual shareholders to vote them in, promising a 50% payout of dividend. But he says that if the individual shareholders voted Beena Modi and her cronies out, the payout would be close to 90%. So he goes on to say, vote her out on the 6th of September at the annual general meeting. So, lots of twists and turns in this bitter feud that is ongoing, but things will come to a pass perhaps on 6th of September. We will slip into a very short break. We'll thank Hetal and Mr. Gupta for joining in. We'll come back with more on the markets.
Welcome back to Trading Hour on CNBC-TV18. What a great day for the market. It may not look like much in terms of, an up move, a 0.3% up move, but we have hit a record high today, and it's a big milestone given the kind of challenges that we've had in the last couple of months. A lot of big contributors as well, largely from the IT pack, right? Who would have thought? I mean, 2 months ago, IT was just a laggard, and now Infosys is coming back as a top contributor. So, yes, lots of things changing in the market, but one thing is constant, the retail money that has come back in a big way.
Okay, and with that, we're completely out of time on Trading Hour. From the entire team, thank you for watching.